What's up, everybody, and welcome back to the channel. Today I will be sharing my thoughts on how to invest $10,000 to earn dividends and passive income. I myself already have around $20,000 invested, but if I had an extra $10,000 lying around, this is what I would do. So what I would do with that first $10,000 is I would split that up between different sectors. The sectors I would enter would be tech, consumer goods, real estate, finance, healthcare, utilities, telecommunications, and energy. Or not energy, industrial, excuse me. Now let's talk about how I would split them up. First and foremost, I would go into M1 Finance and I would set up an account. I don't have an M1 portfolio yet, but I'm going to soon because I really like the platform. Within M1, you can set up an investment pie exactly the way you want, and I'm going to share with you how I would set up my own pie. I would also set up a dividend reinvestment plan, also known as a DRIP program, which will automatically reinvest your dividends across your portfolio equally or into individual stocks. So after I set up my M1 Finance account, first I would take 25% of that $10,000 and I would put it into tech. This would be your Apple, Microsofts, and Intels. Now the thing about tech companies is a lot of them have low dividends. Apple, for example, pays 82 cents per share per year, which doesn't seem like much, but they make up for it with massive growth. Like Apple and Microsoft just in the last few years have shown great growth and have rewarded investors who own them with both capital gains as well as a dividend that has increased significantly over the years. That is what pushes me to have tech as the highest sector to be involved in, because of the rest of the sectors can make up for those small dividend payments but won't give you the growth potential. Next, I would put around 20% into the consumer goods sector. This would be stocks like Coca-Cola, PepsiCo, and Walmart, to name a few. This sector will have a slightly higher dividend yield of around 2 to 3%. I would diversify across a few just to mitigate some risk, but there are some nice stocks in the sector that have paid steady dividends for 25 plus years. So this is a sector you can find some very low risk, great reward companies. These companies won't give you massive growth, but it will be consistent over time. If I had to guess, I would say you'd see around 5 to 7% annual gains, and then you would be receiving your dividend on top of that. And that's why I would put around 20% into that sector. Next, I would take another 20% and stick that into the real estate sector. For example, there's stocks such as Realty Income, Store Capital, and Simon Property Group, to name a few. Some real estate stocks pay a monthly dividend check, which helps you compound those dividends by reinvesting back into this sector. In this sector, you will also usually see a higher dividend yield of around 4 to 5%, which is a nice payout for your investment. With the higher dividend, that gives me good reason to allocate 20% into the sector. The finance sector would be the next area I would diversify into. This would be companies like JP Morgan, Bank of Montreal, and Wells Fargo. Another steady growing sector with an estimated 3% dividend yield. This is a solid sector over time, though you will see it get hit fairly hard when the markets take big hits. So putting around 11% into this sector should help you see some nice gains and dividends, but also keep you diversified enough that you won't take a huge hit when the next recession hits. Next, I would put around 10% into the healthcare sector. This would be companies like Johnson & Johnson, Merck Health, and Pfizer. The healthcare industry is a solid one because healthcare will always be a necessity no matter what is going on in the market. The stock prices of solid healthcare stocks seem to grow at a steady rate over time, much like that of the consumer goods sectors. Allocating 10% of your portfolio would make you an estimated 2 to 3% dividend yield while also making some nice capital gains. The next sector I would look at would be your utility sector, and I would put around 7% into this one. This sector will open you up to companies like Duke Energy, Southern Company, and Dominion Energy. This sector usually has a slightly higher dividend ratio at about 3 to 4%. The sector is often at a steady increase during a good market year. You may expect higher than usual capital gains of around 8 to 10% on top of your 3 to 4% dividend yield. Though there could be some uncertainty as to what the energy sector may look like in the future, this sector is still a solid one to be in. Putting 7% will mitigate the risk of this sector while also grabbing you a nice dividend yield. I would allocate the next 5% in the telecommunications sector, such as AT&T and Verizon. These companies offer a very nice dividend yield, such as AT&T, which has around a 7% yield right now. However, these companies seem to be moving more sideways than at an uptrend, Originally, as a dividend investor, that's fine as long as it doesn't turn into a downtrend. If stocks like this do start to downtrend, you may want to reanalyze that holding and consider reallocating. Lastly, I would put whatever percent left I had into the industrial sector. This is companies like 3M and the General Parts Company. These are nice stocks that have been around quite a few years and tend to pay nice dividends. Expect to make about a 1 to 3% dividend yield, depending on the stocks you pick. These stocks tend to gain around 5% per year, so that's a nice capital gain percentage on top of your dividend. Now, I'm not a financial advisor, and this is strictly my opinion and what I would do if I had another 10,000 lying around. Be sure to do your own research into each sector and into each stock before you purchase. This is just a framework for you guys to use if you want. The stocks I mentioned were just to give examples of some stocks in those sectors. Before I end the video, I want to thank anyone who has liked and subscribed. We passed 10 subscribers the other day, and that's exciting to see. So, anyways, thanks for watching and good luck, guys.